Welcome to Theo Trade. This is Don Kaufman. It's June 7th, 2023. Just about 12 minutes left inside of this trading session here on a Wednesday afternoon. S&P's trading to the downside as tech sellers return with a vengeance to this marketplace. All right, let's actually break down some of the activity in today's session. Clearly, we're going to get very specific when it comes to technology. Nevertheless, you wouldn't know that tech was down by the tune of almost 2%, because when you look at the S&Ps, they're down a listless, 16 points. It's only a, 0.4% move inside of the broader S&Ps. Meanwhile, again, tech selling, it's on right now. I mean, there is definitely some chum out there in the tech waters, if you will. Tech literally hitting new lows right now, and yet it doesn't seem to be impeding upon the S&Ps. How could that be possible? Well, that's exactly one of the areas. The bifurcation continues in the markets. One of the first things I want to display is less about the S&P futures. It's less about the NASDAQ. It's about advanced decline line. Take a look at this. It's an argument that I've made for a considerable period of time that, you could have a positive advanced decline line, which we absolutely do inside of the S&P 100. Doesn't seem to make a difference. The markets are effectively down. But take a look at the bifurcation. It's the exact opposite of some of the activity that we've seen. We've seen Russell getting hammered lately. We've seen Dow getting annihilated lately, right? Well, look at those. They are flying to the upside. I mean, again, the Russell, the little engine that could, is up by the tune of almost 2%. And this is one of the aspects in this marketplace that needs to come to an end for us to make a much more dramatic move in the overall market. And I hope that that is clearly kind of defined. What I'm saying in context is that you're not going to have an S&P 100 with a 65, stocks up, 36 stocks down. If markets are going to make a much more substantial move, when I say markets, I'm really referencing the S&Ps, right? If the S&P is going to make a more substantial move, you got to see a degree of correlation. We're just not seeing that, but we are starting to see, okay? Tech is really getting shaken up today, and today is the first day that I will actually say, no, there's some order flow that is very decisive inside of tech, but there's some areas of this marketplace that are not displaying any risk, and I am bothered by that. So let's jump right into it. So over to the NASDAQ, right? We already talked a little bit about that bifurcation of the advanced decline line. Russell's up, Dow is up, NASDAQ getting hammered out there. But hey, what gives? What gives with what? Volatility. Not a move at all. One of the things that's bothersome is not that the VIX is actually sitting down at 1389. Forget it. I could care less about VIX. VIX is, as I always say, like my predecessor's volatility indicator. But the volatility futures, they just basically shrugging this move off. They literally are shrugging this move off. And you can look at volatility futures that are 14 days out, but it's more effective to look a little further out in time. Vol isn't moving. Isn't moving. Why? Well, it comes down to the fact that the S&Ps aren't really making the move, okay? Because again, as I said, we're very bifurcated at this point. Take a look at the energy sector. The energy sector is straight up, all right? If we look at this in terms of auto expected moves, the auto expected moves is exactly how the option marketplace handicaps forward risk, right? So if you look at the energy sector, and again, the energy sector is very important today because it's up, 2.6%, but it's literally tagging. Right now, it's tagging the upper edge of the expected move. And when I talk about a bifurcation, what I'm really referencing on this, then we look at the QQQ. That's the NASDAQ. Now, there's no question, okay? The NASDAQ is, considerably larger in terms of market capitalization than, of course, would be, for instance, energy. But energy on a percentage basis, it's up 2.65%. Qs are down about 1.6%. Once again, though, if you look at the NASDAQ, it's literally tagging the lower edge of the expected move. That's exactly the kind of bifurcation that I'm referencing, okay? And that's one of the things that you want to focus on in the days to come. So you realize that, tech kind of got its legs knocked out from it. And we're going to look at some specific tech stocks here momentarily. But for the marketplace, that being the S&P 500, for the S&Ps to really take off and to drop back down, for instance, to 42.11, you've actually got to have a much higher degree of correlation. I mean, it's possible, it's plausible. You could have 90 stocks trading to the upside, and the S&P could still be incredibly weak given larger moves, obviously in Microsoft, in Meta, okay, in Nvidia. But okay, at this point in the game, to make a much broader move in the S&P is not, we're going to have correlation. You know, that's actually what took the markets up out of the range. And for the markets to come back down into the range means anything below this 42.11, then and only then you actually have to have higher degrees of correlation. And it's one of the key takeaways from this evening's video. Now, okay, as I said, volatility here is not confirming that there's any risk really on the table. Volatility right now is like, don't worry about it. So why isn't vol picking up? Because there's no degree of correlation. However, at the exact same time that I'm saying that, I see some very disconcerting signs in the marketplace. The bonds, it's a huge move, right? And this is something I have not discussed lately, okay? I haven't discussed it since, well, the bonds actually had this wicked sell side activity. They had a huge bid back under them. And I just like, okay, so the bonds are actually rallying back up. Things are stabilizing to a degree. Things are not stabilizing, okay? This actually looks at this point like bonds are going to make a much more substantial break lower, which would continue to put dramatic pressure into some of the tech stocks. And if the bonds do decide to, quote unquote, go for it, if you will, to the downside, they're only going to need like another point of movement to the downside, to which, again, that's the point where I think you see volatility starting to rage once again. And that's one of the things you really have to shake your head at today in market and go like, man, the S&Ps, it doesn't matter if they're down 12. The NASDAQ's taken a real hit, okay? It's just not moving. Volatility is simply not moving. You know, I've even looked at the NASDAQ and looked at its volatility. And there's a lot of different ways you can actually look at volatility in NASDAQ. Obviously, RVX is like Russell volatility. Okay, you could look like VXN. Okay, VXN of course is NASDAQ volatility. NASDAQ volatility is moving, but once again, it's not of any substance at this point. All right, so as I was telling you a moment ago, I looked at some specific order flow. For example, Microsoft is down 3%. And when you start looking at Microsoft, and again, it's always worth putting auto expected moves. People, it's a smash outside the expected move. Better pay attention to that because, 2, 3 sigma moves in Microsoft don't come often, not to the downside, okay? In fact, when was the last time on the chart you actually saw a 2 or 3 sigma move, okay, of Microsoft to the downside? And then you got to go back to some really wild movement, okay? And that movement back in, 22. So people are not going to like the discussion of 2022 because that was a pretty hostile time in the marketplace, but you rarely see such a significant move to the downside. What does the order flow look like, though, inside of Microsoft? And again, if I open up the option statistics, okay, is there anything of significance? The answer simply is, well, the option activity is elevated. It's 2 times the norm, but I don't see anything per se inside of calls or puts that is a real standout other than overall activity is high. But it actually makes sense if this is the first day of sell side activity. Okay, traders are not necessarily going out and loading up on puts. They're going out and loading up on puts and they're selling out of their call positions. That's why you're actually seeing 2 times the norm on both sides of it. So is that unusual? Yeah, the option activity is high, but it is on both sides presently. Taking a look at Apple for just a moment. Again, we are reading deeply into the order flow on here. Taking a look at Apple. Nothing unusual going on other than the call sizzle is completely dead. No one made an attempt today, okay, to rush the marketplace and buy calls inside of Apple. Unequivocally, nobody, right? So like, 0.6, okay, versus 0.8, nothing going on inside of Apple. What's interesting about that, you start to look at Amazon. Amazon got hit by the tune of over 4%, people. Pay attention. Again, 2 times the norm of options volume. Put sizzle is slightly above the call sizzle, but it just basically means that all of a sudden it's in play. Yes, traders are buying puts, and as many puts as they're buying, they're actually whacking out of their call positions left and right. Google down by the tune of almost 4%. Again, on a percentage basis, these are big boy moves. Google was just outside this morning, its upper edge of the expected move. Now it's facing the lower edge of the expected move. Does the order flow look like anything? Okay, yeah, this one actually slightly elevated on the put side, very similar. Meta, huge move inside of Meta of the tune of 3%. Meta has been explosive to the upside, significant drop. It's outside the expected move. Order flow, what does it look like? Nothing too wild in there. Last but not least, to the downside, NVIDIA. NVIDIA, which has been the beast that can describe why the market is where it presently is, right? Outside the expected move mildly. Anything unusual in the order flow? Unequivocally not. Okay. Yes, we've seen some signs of movement specifically to Microsoft. Okay. A bit inside of Amazon. Nothing unusual though, through and through. There is definitely a sign, okay, of elevated order flow on the option side of the marketplace in a handful of the tech stocks. But until again, we see what? Bonds break, volatility spike, like, tech sellers return with a vengeance. The question at this point is there going to be significant follow through? And you got to be careful at this point because the one thing I really want to stress is that, yeah, I'm all bared up. Like I have no problem saying, look, I'm short all kinds of lovely stuff in here. Okay. Short, short, short. And a lot of it is tech. Okay. And a day like today, it helps and it helps substantially. But here's the thought process you have to have. If you're long tech, be very, very careful because you've got lots of gains. And today, a day like today, traders have moved towards the door. Nobody's rushing yet, but there's only one door, and you better realize that. And if they start to actually rush all at once for that door, this could be a wild and precipitous drop. The NASDAQ today down some 250 handles. It's still relatively unscathed. If you're looking at this in terms of a daily chart, that people is unscathed. That is not nearly as significant as even some of the up moves that we've seen lately. That could change, okay, in a moment's notice. Thanks everybody for joining us here at Theo Trade. Have a wonderful evening. Bye-bye.